Hello, I'm Albert Liu. Today is Tuesday, March 3rd. You're watching the Power and Market Report. Well, the Federal Reserve surprised markets today with a 50 basis point emergency cut. Stock market responded by dropping 800 points. I'm joined for comment by Andy Schectman, president of Miles Franklin Precious Metals. Joins me today from the great state of Minnesota. Andy, thanks for joining me on the Power and Market Report. How are you?
Great, Albert. It's good to be here. Thanks for having me. I appreciate it.
It's great to have you on. It's a great day to have you on. I don't think the Fed was expecting the reaction they got from markets today. They came in with an accommodative action. They probably thought it would help stabilize things. It did the opposite. The market, through a tantrum, dropped 800 points. The total swing was over 1,100 points. It was up earlier in the day and then swiftly turned around. What were your thoughts on the move?
Well, it's, yesterday's move seemed every bit as irrational to me, up 1,200 plus points. And today, when it popped up 500 points after the move and then precipitously fell down, kind of seems to me like there's smart money is exiting stage left on any strength. And prior to the last few days, Albert, you could argue, I think, that the markets have been, by every metric, overvalued, and so in need of a breather. And so people will look to the coronavirus pin as perhaps the pin that pops the bubble. I don't know if that's the case or not, but simply to say that one could argue that the market needs to exhale, needs to shake off some of this excess that by every single metric has placed the markets in record territory, price to book, price to GDP, et cetera. And so I think that, there's probably going to be more to come based upon a market that, even with a 50 basis point correction, seems to slide pretty precipitously.
So we're up a little over 2% in gold. Andy, last week was a tremendous week for gold, and gold has been responding well throughout the various things that have happened in the news cycle. I'm wondering, though, I always like to get the perspective of what's going on in the physical market, which is the market that you operate in. Sometimes the price action in the futures market can be misleading. And from my own experience, I always like to look at volumes to see actually where those price movements are coming from. What did you see last week in the run-up and then also on Friday when it sold off a little bit?
So actually, Albert, the demand and the movements in the physical market in the United States has been somewhat muted, and people may find that surprising. I would argue that the Tier 1 reclassification of gold is the primary driver of the prices across the globe. When the Bank of International Settlements, through the Basel III agreement, reclassified gold as the only other Tier 1 asset on the planet in April 1st of last year, it was, I think, the most game-changing watershed moment of my career. It signals, I believe, where the central banks feel the price of gold is actually going. And when we look at its performance in the United States, it's interesting in that just about every other currency across the planet is viewing gold at all-time highs, including the Swiss franc, the euro, the pound, the Aussie dollar, the Canadian dollar, just not the US yet. Since 2017, when we saw Bitcoin reach 19,000, when we saw the Dow Jones reach record highs at that point, there has been capitulation in this industry, at least here in the United States. There has been euphoria surrounding a stock market that seems to ignore gravity. And so, interestingly enough, it's been just until recently that we've seen really strong demand in the physical side of things. And I don't know if it has to do, coincidentally, with the coronavirus and people looking at things slightly differently. Perhaps that's what it is. But I will tell you that last year was one of our bigger years in terms of overall equity. In 2011, we were doing 200 orders a day. In 2019, we were doing 20 orders a day, but surpassed our all-time high in terms of sales in 2011 with 10% the order volume. So what you're seeing is more of an accredited investor, an investor who is paying attention to people like you and Rick and the alternative media sources instead of the mainstream. But the mainstream here in the United States has yet to embrace precious metals. And so, although it was more brisk this last week, I would argue that it's still a fraction of the public in the United States that is interested in precious metals. As far as Friday's action, it was another classic setup where the commercial banks let the price run. At the same time, built an inordinately large short position on COMEX, and Friday was options expiration date. So it was somewhat, I think, you could see that this was going to happen, and I'm very happy that the price has shot right back up, at least in gold. Still have a little way to go here in silver, but you know, they certainly knocked the wind out of it on Friday. But I think it's encouraging for people who own metals to see just how quickly it snaps right back. And in years past, when this would happen, you wouldn't see it snap right back as fast as it did today. Nonetheless, there is a great deal of demand internationally. And in particular, the tier one status, the reclassification of gold, has made gold really, I think, front and center in the eyes of the central banks. And that, to me, is the most watershed moment of our career, in my career anyway, that for the very first time, we are not fighting against the most sophisticated, in the know, well-funded investors. Actually, they're on our side and accumulating, I guess you could call it, slow de-dollarization. And so ultimately, I think we'll see all-time highs in dollars, just like we are in the other currencies. But bottom line, Albert, is that we are seeing an uptick in business, but it's mostly from the people that we've been talking to for quite some time. I guess you could say the choir is waking up a little bit, but not so much yet the mainstream. And maybe it will take gold approaching or reaching all-time highs before they realize that the road to retirement is indeed paved with things other than mutual funds and stock certificates.
Yeah, it's not an unusual story, one I've heard before. Andy, I'm curious about this classification of investor, this sophisticated high net worth retail. In my own experience, those folks tend to gravitate toward private businesses, real estate, those types of things. If you're seeing them come over and become more interested in gold, I'd be curious to know why you think that is. Why are they interested in gold now?
Well, I think the alternatives are hard to find. You have all of the major markets at all-time highs, the bond market, the stock market, the real estate market. It's difficult to find value. When you look at silver as an example, it's 1/3 of its all-time high, 1980. Show me another commodity on the planet where you can make that statement that it's trading at 1/3 of its 1980 peak. I think really the bottom line is that when you're in search of value, when you're in search of something that isn't overextended at all-time highs by every single metric, the alternatives are few and far between. And our sector, both of our sectors, I think, are of great value right now. And so perhaps it's the investor who is already in things like stocks and bonds and real estate and looking for something of better value. Selling at the high and buying things that are undervalued is always a recipe for success. And so maybe that's what it is. I think the mainstream investor isn't as immersed in alternatives at this point. And with the stock market that's been roaring to all-time highs, it's hard to argue with them or their logic. Oftentimes they move after the move has already been identified. And I think some of the more sophisticated investors are in search of opportunities based upon mathematics and based upon logic and economics that have yet to fully express themselves. And in dollar terms, I think you can easily say that gold and silver have yet to fully express themselves, especially since it's making all-time highs against most of the major currencies on the globe. Hasn't happened yet with the dollar, and perhaps it's the realization of that and the anticipation of it making new all-time highs in dollar terms, with perhaps a slowdown in economic activity due to the coronavirus, that is waking people up to just to those alternatives.
Andy, one of the forces that is a very big factor in not only sustaining precious metals prices, but really vaulting them forward, is the government inflation, essentially, right? The more egregious forms appear to be coming. If you watch the business news, there's a lot of talk, of course, about the sort of medical and social aspects of coronavirus. But there's also a lot of talk related to stimulus and these things. And what I've noticed is they're taking apparatus that are meant to, for example, stabilize the banking system or deal with natural disasters. That would be FDIC or the Federal Reserve or FEMA. And they're finding excuses to use those institutions to prop up businesses, to funnel money directly to businesses. And there also talk of payroll tax cuts and those types of things, all in addition to the 50 basis points we got now, probably another 50 before the end of the year, and who knows what kind of asset purchase program they have planned. Of all of that stuff, is there anything that you're particularly concerned about or optimistic that will affect the gold price?
Well, the term pushing on a string comes to mind when we talk about throwing money out of helicopters and easy money into a system that, has been drowning in easy money through the repo program and through the purchasing of treasuries by the Fed. I don't know that all the money in the world will get people to go out to crowded events and spend money and travel and do the things that would stimulate the economy. And so I think that what we've seen with all of this easy money is asset price inflation, and hasn't found its way into the system yet where we see price inflation. But asset price inflation nonetheless, and that's why you have a Dow Jones trading at all-time highs and is overvalued by every single metric that there is. And financial markets that are as overextended as they have ever been because of all of this easy money and Fed-induced credit. So at some point, the pushing on the string becomes reality. The money that you pour in isn't going to get people to spend or to borrow. And so I think that in general, one of these days, all of the Fed meddling will find its way into price inflation. And that's when you'll start to realize it in terms of its value in gold, and which is, the barometer to all of that inflationary stimulus. So, I found it interesting. I found it kind of, it doesn't make sense to me, Albert, that the Fed would think that this would help stimulate an economy that is reeling from fear. So I don't know that it will do anything, but eventually find its way, hopefully, I think, into real price inflation, and it will be seen for what it is. That the asset price inflation that we have seen has been largely due to the Fed intervening and making easy money and easy credit, across the board. And so at this point right now, I don't see how it affects or really helps much of anything to stimulate an economy that is reeling from fear.
When you talk to customers, Andy, about moving assets to precious metals, what do you find that you're competing with? Are you competing with cash, treasury bills, cryptocurrencies? What are people using as an alternative to gold?
I think there's a certain segment of the populace that is looking to cryptocurrencies. I think really what it is that we're competing somewhat against ourselves in the respect that for so long gold has had an inverse correlation to logic, and what seems like should be the right way to go, what seems logical, has had an inverse correlation in this industry. And I think that if you are in this industry long enough, you feel like the little boy who's cried wolf. At some point, I think the markets need to express themselves in reality. The gold price needs to really take off and not get hammered down like we saw on Friday. And that's what I'll fall back on. Why I'm so encouraged is the reclassification, Albert. That reclassification of gold means that the central banks are finally net accumulators of precious metals instead of net sellers. And so ultimately, I think that getting on the right side of this trade will ultimately, and have strong fingertips to hang on, will ultimately sway the public. When you look at, for example, when you look at the group Morningstar, the mutual fund rating company, they have a division that was originally, it used to be a company called Ibbotson out of Chicago. Morningstar bought them, but before they joined Morningstar, Ibbotson was tasked with finding alternatives to the U.S. stock market. And they basically came out and said, because interest rates were so low, that the inverse correlation between the U.S. stock market and the U.S. bond market is gone. And so when we talk about alternatives to the stock market, they basically came out and said the only inversely correlated asset to the U.S. stock market anymore are precious metals. And I think people haven't realized that yet. And at this point, we're not really competing with anyone. It's just that the gold and silver market has been very frustrating. If you've been part of it for the past decade, you've been frustrated. There's been capitulation. And I think it's, what have you done for me lately? People need to see something substantive before they come back in, because again, it just seems like, if all you do is throw your money into the stock market and hang on, that it goes up. And that's what the public sees until we see a correction that is substantive enough to scare them into looking to precious metals. And now that we have the most sophisticated, well-funded, well-informed investors on the planet slowly de-dollarizing and accumulating gold and silver, I think you'll see a sea change over time. And when that happens, then I think it will be less a question of what alternatives and more a question of rapid mitigation of dollar exposure. At this point, that fear hasn't set in yet. And it's beginning to take hold a little bit with the people whom we've been talking to for the last 3 decades. But as far as the mainstream, here again, they are not a part of this yet, Albert. And when they do, when the mainstream realizes that this is a place they need to be, I think you'll see fireworks. I believe in 1980, the average allocation to a gold portfolio was north of 8%. Now it's less than 1%. I think that if you look at the mean over the whole period of time, it was roughly 2.5%. So if all we saw was a revision to the mean in the price of gold, or in the allocation to gold in people's portfolios, you're looking at a 5 times demand. And something like that happens when we see a swing back to gold being part of everyone's portfolio. I would expect to see a massive demand, massive increase in premiums, difficulty in obtaining product. All of the things that I thought would have happened long ago, I think will happen very quickly.
All right, Andy, we're going to have to leave it there. My guest has been Andy Schectman, president of Miles Franklin Precious Metals. You can visit them at milesfranklin.com. Andy, how can folks reach out to you if they're interested in learning more about Miles?
They can email me directly at andy@milesfranklin.com. I will reply to every single email, send information back on our company and our services. And accessibility is very important to me, Albert. So have them reach out directly to me at andy@milesfranklin, and can find information on our website at milesfranklin.com.
All right. Thank you very much, Andy.
Thank you, Albert.